And welcome back to the show. Now, our next guest has strongly predicted that the next financial crisis will likely happen before March this year.
What's worrying, he says, is going to be worse than the last one in 2008. And all his analysis and a relook at today's investment tools are the content of his third book, What Your School Never Taught You About Money, and that's hit bookstores recently.
Well, author and founder of financial education website MasterYourFinance.com, Dennis Ng is in studio with us this morning to tell us why the global financial outlook is far from rosy in 2012 in his opinion. Very good morning to you, Dennis.
Morning, Dennis.
Yeah, very good morning.
Yeah.
So I want to, prompt you on that bit about 2012. We will see another global financial crisis unfold before March this year, which is not far away. I mean, what gives you, what are the reasons why you say this?
The exact timing, of course, no one really knows. It can be March, it can be probably by the first half of the year. But if we really analyze what actually caused the previous crisis in the 2008, the main reason was actually overborrowing by individuals in America, which led to the subprime crisis and leading to the financial system in trouble. So actually what we had was a case of overborrowing. But in the last 2.5 years, what did all the governments do? They actually went ahead. How did they solve the problem? They solved the problem by borrowing more money. So basically the governments of the world step in to borrow money. So how can you cure a problem of too much debt with more debt? So they basically postpone the problem and it's going to haunt us again.
So what you're trying to say is what they did is just give you the painkiller to ease the situation, but you didn't really solve what's the root of the problem.
Yeah, I guess, it makes sense in that way, but if you think about it, governments are the ones to sort of, who can create the money to a certain extent. And that was the only way out. We didn't really have a choice. So do you think this is going to play out the same way? Are all the signs pointing to the same kind of disaster?
Or even worse, maybe?
This would be worse because now the world is realizing that a lot of the governments are overborrowing. They can't pay their debts. So what happened is Greece, Portugal, Ireland, when people realized that they can't pay their debt, so they went into trouble. And the next, I'm afraid, maybe the next to go will be Italy. So when people realize that a lot of the governments are overborrowing and they can't pay their debts, then that will trigger the next global financial crisis.
We've seen the European countries, one by one sort of coming down. Spain and Italy, like you mentioned. Looking at the Eurozone debt crisis, which is on the minds of many investors as well, do you think this next financial crisis is really scary, or, is it something that we can weather through as well if we take the right steps?
Definitely, this crisis will be worse than the previous one. The reason why it will be worse is because the last crisis, we only had US in trouble. But the next crisis, what we're going to have is US, Europe in trouble as well. And we're going to even have Japan and China that will be probably heading to slow down as well. So it'll be the first time that the four major economies of the world goes into trouble. And this has never happened before in the last 80 years. So it's going to be the worst crisis since the Great Depression in 1929.
Now, you mentioned China. For quite a while, China and India have been hailed as sort of the next big thing with Europe, with the US kind of heading on a downward spiral. These two countries were supposed to help prop up the rest of the world economy. You think that's not going to happen anymore?
Well, we need to look at the big numbers. The big numbers is China only constitute 9% of the world economy, and India constitutes 6%. So combined, they constitute 15%. So the two economies, 30% of their economy depends on export. So their export will be affected by slowdown in US and Europe. And if we look at US and Europe, they each constitute 23% of the world economy. So combined, they constitute 46%. And Japan constitute 5%. So combined, all the G3 economies constitute 51%. So how can 15% compensate 51%? The numbers just don't add up.
So it's sort of a gloomy outlook that we have of the world, and there's nothing that we individuals can do. But let's talk about what we can do to control our own finances. And one of the things that you mentioned is that, we are usually told that diversifying your portfolio is one key way, but you are now saying, no, cash is king. Hold on to your cash. Is that right?
Yeah, I think that the traditional way of diversifying into different markets no longer work. If you look at it, every day when the stock market falls, all the markets fall. US fall, Europe falls, Asia falls. And when the markets fall, all assets fall. All risk assets fall. Stocks fall, gold fall, silver fall, commodities fall. So the traditional way of diversification no longer works. What you right now need is a very dynamic asset allocation, which is what I learned from the rich. The rich sometimes will actually have a huge proportion of their wealth in cash. And currently I have about 70% of my money, wealth, basically in cash, waiting for the crisis to strike.
Okay.
So you're holding on to it so that you can invest when the moment comes, is it?
Yeah.
Or you're just going to hold on to it?
I'll hold on to it because imagine a crisis if the stock prices were to fall another 40%. That means easily I can buy something that is now maybe $10 for $6 down the road. So I would be getting ahead by 40% compared to someone who is now invested.
But you see, let's say you do that now. You buy it for $5, what used to be $10. The next time it goes down again to $2. But you're stuck with this batch. For the rich, they've got another stash of funds for the ultra rich. For the rest of us, we usually have one reserve, not a whole bunch of reserves, you know.
No, so like I mentioned to you is that you need to allocate these reserves. So like for instance, last year I have 70% of my money invested and about 40% was in stocks. But right now I have almost zero in stocks and I've raised my cash position to 70%. So we don't have different stacks of money, but we are just doing a very dynamic allocation of that money. So sometimes it can be in stocks, sometimes it can be totally in cash.
Okay, depending on situation, you allocate how you use your money. Okay, we're going to continue this conversation. In fact, the next bit will be interesting because it's all about how to educate the young ones now. Because, you know, you need to start at a young age to understand what's going on.
Our guest, Dennis Ng, author and the founder of financial education website masteryourfinance.com. He's going to be with us for the next portion, but meantime, we'll take off for a quick break. Back in just a bit.